Hi all, today we are going to discuss about deficiency account. Um, Deficiency is prepared during liquidation or insolvency. It explains how deficiencies shown in the statement of affairs. It shows the loss of capital arised over the time and what are all the reasons for the financial backlog. It acts as an statement, explanatory statement for creditors, shareholders and also for the court. Next, need for deficiency account. The main need is what are all the factors responsible for the insolvency and to ensure transparency during winding up and to show how the initial capital invested by the investors got spoiled, and it helps to understand what are all the losses arised for what are the reasons for the losses. For example, poor management and then economic conditions, abnormal disasters or if any, and there is if any speculative losses and excessive drawings means amount taken for the personal use by the investors or owners. So it provide a detailed breakdown for the loss. Next one is relationship with statement of affairs. Actually, assets minus liabilities equal to deficiency or surplus. It acts as a bridge between the past business performance and current financial status. Then what are all the items shown in deficiency account means if there is any trading losses over that particular year, then if the assets are sold and it is uh, if losses happened and then bad debts written off and depreciation, reduction in the value of the assets and excessive drawings by owners or partners and loss arised due to fire, theft, accidents, then abnormal or speculative losses, then if there is any interest on loans or overdue creditors, then if there is any administrative, legal and liquidation expenses, fictitious assets is written off if any, then preliminary expenses. Preliminary expenses means initial expenses incurred for the construction of company or construction of company and a discount on issue of shares, goodwill written off. Then next one is what are all the items shown in deficiency account means we will show opening capital, profit and loss account, general reserve, surplus from prior years, from the initial years, capital introduced later, any surplus realized during liquidation. It is a rare combination. Then what all the logics behind the deficiency account means start with the beginning capital, then it will list off all the losses and expenses incurred over the period of time, then deficiency equal to capital minus accumulated losses. It helps to deduct continuous operational losses and heavy dependence of the loans, then poor asset management. It is very important for stakeholders. For creditors, it will show the real position. For shareholders, how their capital was lost. For court or liquidator, it is the evidence for the company's financial performance. For future analysis, it highlights the what all the mistakes can be avoided in the future course of time. Here the deficiency account is a very important statement in the liquidation process. It does not calculate profit, but it clearly explained why losses incurred over a period of time and how it can be managed or how it can be avoided in the future period of time, and it is very useful for the stakeholders, creditors and also court. It acts as a evidence and it ensures fairness and accountability and transparency, and it is very useful for the stakeholders understand the what are all the causes of insolvency in that particular company. So it is a very important statement in the liquidation process. Thank you.